Hello everyone, so in today's video, we're going to learn about car loan. Okay, so a car or automobile loan is just that. It is a loan used to buy a car or truck. You can't use it to buy anything else. So we already have mortgage for house loan. Remember, these loans are different from each other. They're not the same. So a car loan is a loan that used for car. A mortgage is a loan used for house. So yes, talk about car loan today. So it is kind of the same with house loan. It's kind of the same with a mortgage, but it's just different that it is buying a house and a car. Okay, so it is usually low interest and financed by car dealerships. Why? Because it's car and it's very expensive. So you won't be having a lot of money. So that's why there is car loan and mortgage. So car loan can be very useful if you don't have enough money to pay upfront and you have low interest. So for example, let's say you need to get a used car. The one you like costs like $10,000, but you only have $8,000 in saving. So you can get a loan to cover the $2,000 needed to buy the car. So if the interest rate is 2%, then you will own a total of $2,040 at the end of the year. So the way that you calculated the interest and you add it with the principal is actually the same like the mortgage. So if you decided to get a car loan, do some forecasting and set a goal on when you can plan to pay off the debt, because you don't want debt to haunt you. And also be aware that if you don't repay the loan, your car can be taken away. Yes, if you cannot repay the loan. So remember that you don't have to wait until the end of the year to pay off a loan. In fact, it is better to pay it off as soon as possible. So maybe you told the person you are like borrowing and you said, I'm going to pay that in 1 year, I think. You set a goal for 1 year. But you already got $2,000 that you save up $2,000 in 6 months, half years. So you don't have to wait for the end of the years. Yes, because you might forgot. First of all is that. Next of all is that you can actually pay it off as soon as possible. You would, if you can, you should pay it as soon as possible. Why? Well, because maybe you can forgot it. Maybe at the end of the year you forgot it, and they might take your car. That's the first. Second of all is that the soon you pay it as possible, the soon you're gonna have the soon you pay it as the soon you pay it, the soon the debt will be going away from you. And by the way, the interest is not going to be higher. The interest not gonna be higher than that. The interest is not gonna going up. So if you have the money before the end of the year, you should not wait. You should pay it as soon as possible. It's because you don't want to have all things all around you that haunt you. Okay, and so now let's practice. Okay, it's all black. Okay. What's this? Okay. So why is it a good idea to pay off a loan as soon as possible? A, because there isn't any reason that anyone should ever get into any debt. B, you should wait as long as you can to pay off a loan. It won't affect the amount you own. C, because there's usually interest charged, which make the amount you own grow over time. Why is it a good idea to pay off a loan as soon as possible? So we just talked about this because there's usually interest charged inside, so which make the amount you own grow over time. So that's why you need to pay as soon as possible. It's not gonna be you should wait as long as you can to pay off a loan. It won't affect the amount you own. because they also charge interest. So it will affect the amount you own. So B is not the correct answer, and A is not either, because there isn't any reason that anyone should ever get into a debt. Yes, because anyone should ever get into a debt. Anyone shouldn't ever get into a debt. Yes, but if you buy a car, then there is reason for you to get into debt. If you buy a house, there is reason for you to get into debt. If you buy something and you don't have money, there is a reason that you can get into debt. So it's not the correct answer, and B is not either. And C is correct, because there's usually interest charged. When you get a loan through a car dealership, what can you buy with the money? A, you can make a down payment on a house. B, you can only purchase car. C, you can only pay your school tuition. So when you get a loan through a car dealership, what can you buy with the money? So when you get a loan through a car dealership, then you can only buy car with your money. You're not gonna use you see, like, they have low interest rates, so you just go, hey, I'm gonna use this dealership with a loan through a car, and I'm gonna use it to buy groceries. That's funny. Okay, so you can only make down payment for cars. You can only purchase car. You're gonna pay your school tuition because it's a car loan, not a school loan, and it's not gonna be a house. So it's not gonna make down a payment on a house too, because it is not a mortgage. I mean, B. Sorry. Okay, so what is the common way what is the common way car salesmen entire people to buy cars? A, they offer car loan with no interest. B, they offer high interest car loans. C, they offer low interest car loans. So maybe if someone are very friendly with you, maybe they've been friend with you for a long time, or something between you. Maybe you save their life. Maybe they'll charge no interest, but I don't think that will happen a lot. But this is a common way salesmen. This is not the common way car salesmen do, because then if they have no interest, then they won't be getting money. They won't be getting extra money for themselves. Extra money, like the interest thing they would need. B, they offer high interest car loan. Okay, if they offer high interest, then people is not gonna be happy, right? People is not gonna be happy with you, because the interest is gonna be too high and they cannot buy cars. So they offer high interest car loan is not something that common way car salesmen do. But they will offer low interest car loans. They still get interest, but it is lower, so people would want to buy them. When you are buying a car, what does it mean when a car dealership finance you? A, the car dealership pay the car for you. B, the car dealership accept whatever you can afford for the car. C, the car dealership helped you get a car loan so you can buy the car. So the car dealership So the car dealership's gonna pay the car for you, but they're gonna give you time to pay off the interest, to pay off the money that you borrow. So the car dealership helped you get a car loan so you can buy the car. Yes, they will only help you get a car loan so they can help you buy a car, but they're not gonna accept whatever you can afford for the car. Let's say I give you this pencil in exchange for the car. That's funny. That's gonna happen. That's not gonna happen. A, the car dealership pay for the car for you. It's not gonna be the right answer either, because if the car dealership do that, then the car company is gonna get any money. So no. C is the correct answer, because the car dealership can help you get a car loan so that you can buy the car and you can still pay back the money you own them. Last one. I want you to do this by your own, because who knows? Maybe in the future you might buy like cars and you will actually like get use it to this, and I think you can do that. And thank you for coming and have a